Hello, everyone. This is Ernie Humphrey. I'm the CEO of Treasury Webinars. I'm thrilled to have everyone here for our webinar today, Best Practices for Bank Connectivity and Financial Messaging in 2024. Also honored to have with me is my co-speaker, John Paquette. He's the Vice President of Solutions for the U.S. For TIS. So before I jump into the exciting housekeeping items, I want to go ahead and welcome John to the webinar and give John the opportunity to give us a little bit about his background. John?
All right, thanks, Ernie. Happy to be here. As mentioned, I'm John Paquette, EVP Solutions and Product Strategy for TIS. Been with TIS in the tech space for about 5 years, assisting with our solutions architects team and our overall product strategy. But I've actually been a practitioner for about 15 prior to jumping over to the tech space, working as a treasurer and in different finance positions directly within US-based companies with international presences. So happy to be here today. This is a topic that we love, bank connectivity and financial messaging, and one that I definitely enjoy participating in webinars on. So thanks, Ernie.
All right, thanks, John. Also, of course, I want to thank my webinar partner today, TIS. They are a longtime thought leadership partner of mine, probably my longest thought leadership partner. They share my commitment not only to thought leadership, but to impacting the career success of those who leverage their software solutions. Housekeeping items, everyone stay in your seats. I know it's exciting. If you'd like a certificate of attendance for the webinar today in order to use to submit for continuing education credits, whether that be CTP or CPA or another certification, you'll have to answer all the polling questions and remain on for the duration of the webinar. If you'd like a copy of the presentation today, or again, with that certificate of attendance, you'd like that. If you didn't check the box on the way in on the registration form, please send an email to Ernie@treasurywebinars.com. Again, that's Ernie@treasurywebinars.com. We have a very short survey at the end of the webinar today. We always strive to improve the ROI we offer you for your valuable time because we know there are many webinars out there, so we always want to know what we can do better. So a little bit about our agenda today. We're going to talk about the importance of bank connectivity. John's going to take the heavy lifting on this one. We're going to talk about the evolving landscape of bank connectivity and messaging formats. To me, it's just amazing as I dove into the presentation and getting some content from my friends at TIS, just how much things have changed. I was a treasury manager. I'm getting old. Back in the 2000s, early 2000s, it's amazing the opportunities that we have for bank connectivity and the value that we can really deliver to our organizations by leveraging the connectivity and messaging. John's going to talk about the complexities of connectivity and messaging. He's going to offer you some connectivity structures and advice. Then I'm going to chime in on one of my favorite topics in regards to now that we have the messaging to do that. We're going to talk about how to leverage messaging in order to do a much better job on bank fee management. And then John's going to kind of round us out with the ROI of bank connectivity and messaging done right. And then we're going to wrap things up with some final thoughts. So fast and furious as always, I'm going to go ahead before John jumps in just to kind of level set a little bit. For the audience, I'm going to go ahead and launch a first polling question just to get a sense of some of the complexities that people are dealing with. Of course, it's not just the number of bank accounts that you have, but also where they're located. But just to get a sense, asking you to share with us how many bank accounts your company has across the globe. Is it less than 10, 11 to 50, 51 to 100, 101 to 250, or more than 250? I'm going to go ahead and give you guys maybe 10, 20 seconds or so to go ahead and answer the polling question. Again, if you would like to receive a certificate of attendance for today's event, you will have to answer all the polling questions, and we can take your questions and comments in the questions area of your GoToWebinar control panel. And then we're going to go ahead and take a quick peek at the results here, and then we'll go ahead and hand the floor over to John, and he's going to kick us off with some very interesting content, which I didn't really have a good sense of really the evolution of bank connectivity and where we're at today, but also maybe where we're going in the future. So I'm going to go ahead, give you guys a few more seconds, and go ahead and close the polling question. All right, let's go ahead and take a quick peek at the results. So we have a little bit of a bell going on here. So we got 20% less than 10, then we got 23% more than 250. But again, a lot of times it really doesn't matter. the number of bank accounts, it does matter, but also matters where those bank accounts are located, and the challenges in bank connectivity and bank messaging are very much dependent on the countries and continents that you're into and what business operations that you have there. So thank you very much, everyone, for taking the polling question. So I'm going to go ahead and close the polling question here, and I'm going to go ahead and hand the floor over to John. John, please take it away, my friend.
All right, thanks a lot, Ernie. Yeah, and as mentioned, we're going to start here with a little bit of a history lesson on the evolution of bank connectivity and formatting, going all the way back to 1970 with the advent of the SWIFT network, which is kind of hard to imagine that SWIFT existed all the way back in the 1970s. This wasn't the SWIFT that we know today at all. So, really at the end of this decade, there were about 250 members and 10 million messages annually. Really, the SWIFT that everybody's probably most familiar with, the SWIFT for corporates, kind of evolved through the launch of SwiftNet in the 2000s. And by the end of the 2000s, that volume was up to 3.8 billion messages across 210 countries. So, and obviously, SWIFT has continued to be a household name in the bank connectivity service, and a connectivity strategy that a lot of large multinational companies kind of evolved to. Fast forward to the 1990s, then you have the introduction of host-to-host connections with banking partners through some of the common protocols that really are still in use today, things like FTP or SFTP connections, AS2 connections, and things like that. Really the first direct exchanges of information with your banking partners through direct connectivity. A lot of this was done through either regional formats like NACHA, BAI, BACS formats, CPA formats, or through bank proprietary formats as well, and sort of CSV structures and things like that, right? So, but a lot of these formats and protocols still exist today. You also had the introduction of the first e-banking portals, which still remain a key way that Treasury kind of accesses their bank information and executes manual payments. Wells Fargo actually claims to have initiated the first e-banking portal back in 1995, so they claim the credit for that. And then obviously shortly after that, all the major cash management banks and even your regional banks today offer e-banking functionality to corporates as well. And then you have to go all the way to 2010 to find the next big advancement in bank connectivity and format initiatives, and that's with the ISO 20022 initiative, which is the movement towards XML-based payment reporting formats. Really, the idea here is to drive a lot of standardization globally around the way that banks communicate with each other. They're having simple structures where all banks sort of communicate the same data elements in the same segments, sort of eventually supersede some of these more legacy formats like the MT formats and the regional formats like the NACHA formats, et cetera, right? So still a very ongoing evolution. Some corporates have begun to adopt this messaging format already. SWIFT has set a deadline for their members to adopt ISO 20022 by November 2025. So that's right around the corner, obviously, at this point. But I think the expectation is that corporates will migrate off some of these legacy formats and onto ISO XML for another 5-10 years, even after that date. And then 2015, you start to see open banking APIs being introduced, which is a popular topic in the market today. A lot of organizations are looking to take advantage of these for real-time exchange of information. In Europe, you had some initiatives like PSD and then PSD2, which really accelerated the open banking movement and the advent of open banking APIs. So you see some more sort of mature APIs in those markets. And the US, it's been more homegrown, sort of just driven by more corporate demand to receive real-time information and for banks to modernize a bit too. So, but yeah, this is still a way that organizations are kind of migrating towards it. And a lot of people think this is sort of the future of bank connectivity, but really a lot of the use cases, the standardization, the maturity of the APIs is still ongoing. I think everybody hopes it's a little bit of a faster adoption of this technology than some of these legacy protocols that we see going back to 1970s, and this will be accelerated a little bit quicker. And then 2018, what comes next? I think maybe everybody doesn't really know right now, but certainly there are a lot of fintechs out there exploring opportunities around things like blockchain, which can provide a lot of security around the payment initiation process and a lot of other processes from that respect as well. Obviously, limit fraud risks and even sort of move to an environment where banking could be 24/7, right? So that's sort of the forward-looking, without really the use cases behind it to really make it a technology a lot of organizations are adopting today, but certainly something to keep an eye on. So moving into some survey results here. These are actually results from a 2023 survey we launched in conjunction with Ernie and Treasury webinars. But we went out and asked the Treasury market a couple different questions, but this was an interesting one, in terms of what is the most important criteria when assessing new Treasury technology projects. And you can see the two big spikes there right in the middle in terms of support for modern banking tech. There you're talking about things like open banking APIs and real-time payments, as well as support for new tech like artificial intelligence and machine learning, which is obviously another really popular topic, particularly in Treasury. A lot of people see the benefits of that in terms of, enabling the cash forecasting process, enabling fraud detection processes and things like that. So, and it's interesting, these two jump up as the primary drivers of technology decisions. You can really see that sort of this technology curve is on treasurers' minds. And even if some of these technologies are still reaching their full maturity, I think corporates don't want to get on, the wrong train, so to speak, and they want to be with a provider they can grow with that's going to support these protocols. It's going to help them identify use cases related to them and things like that, right? So definitely jumping far above things that used to sort of drive technology decisions like process automation, which is something that I think a lot of organizations have solved for these days. But still, you can see enhancements to security and controls. That's number 3 there, right? Fraud threats continue to evolve, particularly with the advancement of AI and what that's really doing for fraud threats for organizations and things like that. Obviously, securing the payments process is going to be, a key for most organizations, and still a key objective of any technology investment. So moving into some of the complexities that come about when organizations look to address bank connectivity and formats, it's really, and Ernie alluded to this during the survey results, it's not just about the number of bank accounts, there's a lot of different variables that really lead to the complexity here. And those can be, what bank relationships you're using, what countries you're using them in, what are your payment needs in that market? Are you doing, batch AP payments versus urgent payments versus FX payments versus, real-time payments? Ultimately, what message formats you need to utilize those payment instruments, what systems you have in the mix there, where your sort of payment initiation instructions originating out of. Is that an ERP system? Is there a TMS for manual payments? Is it multiple back office systems? And then broadly, what connectivity options your banks support to be able to enable those use cases, right? So a lot of different factors here. I think as we go through the presentation here today, you'll see how these really compound on top of each other as you sort of grow the number of bank relationships you use, the number of countries you operate in, which is a lot of complexity the organizations are dealing with today. In the back half of the presentation, we're going to talk a lot about the solutions, some of the modern strategies organizations can use to address that. But here we're going to continue to focus really on the challenges. So not addressing bank connectivity, payment formatting, really getting sort of a secure straight-through processing in place. What's the implications of that? First of all, lack of standardization, right? If you're not unable to address a lot of these tech hurdles that allow you to get straight-through processing in place, based on sort of fully understanding and being able to implement bank protocols and payment formats, you're going to have a lot of workarounds, manual processes, and things like that. And obviously, those are the enemies to standardization. And without standardization, you really don't have control on your payment process. It's really hard to administer things like your company's payment approval policy if you don't have standardization and technology to back that up. So it's a big fundamental issue for organizations that sort of results from not having these challenges solved for. Inability to really address, global bank disparity. So, we talked a lot about formats. Every bank has their own, every country has their own formats, but there's also country-specific requirements, such as regulatory reporting items, the need to use special language characters in payment files for beneficiary name and address information and things like that. And if you don't have a good strategy for how to deal with sort of the scalability from that standpoint, it's really hard to address those local requirements that you need to really be able to put in straight-through processing in some of those other markets. And then the last one is the emergence of these localized data silos, which is really becoming problematic for organizations. If you don't have a global standardized process, probably you're resorting to localized processes in each one of your regional processing centers. So say, for example, a shared service center in Europe connecting to their banks differently than one in the US versus one in Asia, maybe manual payments processes in place in some of your other regions. And what happens is all that data gets siloed within those particular regions and can't be rolled up organizationally to be able to leverage more strategically. And that can have implications for Treasury, obviously, in terms of cash positioning and forecasting, where they're reliant on, say, spreadsheets or even emails to understand cash positions in different regions. And really, as organizations move towards strategies that are using AI and machine learning as foundational technologies, those technologies thrive on data. And without the centralization, without a sort of an effective data management strategy, and if those data elements are trapped in those silos, it becomes very, very hard to implement those technologies. So some of the challenges we're seeing there. And really just a sample use case here to show how these variables can compound upon each other. So this is, a typical scenario TIS would see. Obviously, this is a very global organization, but what you're seeing here by the graphic in the middle is the regions where this particular company is doing business, right? This is where they're banking, where they have operations. Ultimately, they're using different bank relationships in each one of those markets to be able to fuel their operations. Each one of those bank relationships supports a different protocol. So some might be connectable by host-to-host connections, some by APIs, others only reachable via the SWIFT network. So you can already see the complexity that's starting to build there if you're building your bank connectivity strategy, where you're managing these multiple protocols across the globe to be able to connect up with these different bank relationships. Then you layer into that the payment instruments you actually have to use in those markets, say, low value batch payments or SEPA payments or ACH payments or faster payments in each one of those markets to be able to enable your business needs. And then correspondingly, the format requirements of the banks in those markets to be able to use those payment instruments. And you can see how this complexity just grows and grows and grows and becomes a very, very difficult thing for organizations to manage. This is why you see a lot of companies falling into these manual processes, workarounds, or more localized, say, siloed type processes, because it's very difficult for an organization in-house to deal with some of these challenges and complexities. Once again, we're going to talk about some of the solutions in the back half, but just to give you a visual of some of the challenges and how they can kind of compound upon each other in the bank.
Hey, John, can I ask a question here on this? Is out of scope, is that just white word where they're not doing business at this time?
Exactly. Yeah,
Okay.
those markets that they're currently not, this sample company here would not be doing business in.
So are there any particular regions here? I know, they've got like 6 or 7 regions. Are there specific, I would say, continents or countries that you see causing the most issues that they're most difficult? Just look at terms of connectivity. Are there any places in the world where you see your clients maybe having the most challenges and would probably see the biggest benefits to to get some outside assistance?
Latin American markets, South American markets are always challenging, obviously depending on the bank relationships that are being used in those markets, but there are some, I guess, region-specific formats in use there, and a lot of those banks utilize some kind of obscure protocols. Also, there's a lot of regulations around how you can move money in a lot of those markets as well that need to be considered when you're connecting up to those bank relationships. Asia has a lot of the same considerations. Typically, it's pretty easy to connect up to those banks, but there's a lot of complexities in terms of requirements to use, say, the local language characters in the payment file to be able to communicate beneficiary names and addresses. There's a lot of needs to be able to communicate regulatory reporting codes, purpose of payment type codes in those payment instruments as well. So there are some additional complexity variables there. And obviously Africa has similar considerations as well, I'd say.
Okay, it's just interesting also to see that there's, there are some different issues. I get it, but within the continent, right? The continents there, it's interesting to see over there in Africa. And then, so thanks for this. This is really important. This is a slide you could probably talk about for the whole webinar, right? So, all right, John, thanks. I'll hand the floor back over to you.
Yeah, just moving to the next slide here. This is just sort of a wrap-up slide to explain some of those complexities a little bit further. So, obviously what corporates are dealing with geographically, different protocols for different banks and different messaging format standards, right? So a lot of that's being cleaned up, hopefully by some of the initiatives in flight now, particularly ISO 20022, and what that's doing to sort of transform at least the formats corporates are using to communicate with their bank relationships. Although the geographic variations will still exist, there'll still be different data elements required per bank, per region. So it won't totally simplify that. But in general, it can be a really compounding factor depending on the banks and the number of payment instruments you need to use and the regions that you're doing business in. And something that corporates obviously are looking to solve for because it has major implications for standardization, control, and ultimately their data management strategies. So we will talk a little bit more about that as we move along in the presentation here. But for now, let's hand over to Ernie here. Ernie, I think you're going to talk a little bit about processes for monitoring, benchmarking, and managing bank fees.
Okay, John, let me go ahead and ask you a question before we head north here on the bank fees. So I was just thinking, especially when you touched on the slide that had those data silos, right? And it really stuck out to me, even within organizations, especially global organizations, trying to collaborate, right? Just that format structure. So you're having different format structures coming from your own company's organizations, right? To get that communication set. So it just, to me, it kind of just makes the business case come clear because I'm pretty sure there's a lot of different formats in all these different countries. But then if you're using different formats with each subsidiary. So you may have good connectivity and good formatting from corporate, but then you could have what I would call a little bit of a hairball mess from the organizations. Are you seeing that companies find that there's a lot of things going on that they might not have known on when you start to look under the hood across the entire globe?
Yeah, I'd say definitely, and particularly when you're talking about organizations that have different regional operations that might be
Yeah.
using different ERP systems. You know, say for example, you have one company, one business unit using SAP. They can produce one file format, say it's an IDoc, but then you have another using Oracle over in Europe. What they're going to be able to produce for a file format out of that ERP system is going to be entirely different. And just trying to normalize those into what the bank needs in sort of a way that's efficient and you know, I guess comprehensive is definitely a challenge we see corporate space and something that we help with quite a bit. So.
Okay. All right, cool. Thanks, John. All right, before we jump into the talk about just specifically the type of messaging that's become more valuable, talk about leveraging good financial messaging to manage your bank account fees. I'm going to go ahead and launch a polling question. Be honest, I'm not going to tell on you. Does your company understand and benchmark your bank fees? Yes, no, but you're trying. No, but you are trying to understand, but you're not benchmarking your fees, or neither. You don't understand or benchmark your fees, particularly important. So we'll talk through some of the financial messaging, and I know TIS has just got into a relationship on this side to help companies understand their bank fees, and I'll let John touch on that after I share my commentary. Way back in the day when I worked at AFP, I used to manage the AFP service codes, which is a tool that organizations use to help benchmark their fees and manage those. And there have been updates, especially on the global side. There was a major update to the 2023 the AFP global service codes, which is different than the AFP service codes for the US. So the US codes were updated in 2020. The global codes were updated in 23. I think we're just starting to see those. And so that's something that you want to have on your radar as well when you're looking at your bank fee analysis. So I'm going to go ahead and close the polling question, take a quick peek. All right, let's go ahead and take a quick peek. Good to see that 38% of you are benchmarking and managing your bank fees. And so if we kind of put that back towards 0 to 10, right, accounts is a little bit easier to do it if you have the account. So I think we had 20-something% of folks, and so hopefully that's a little easier. But I'd be interested to see where the people that have over 250 bank accounts really fall in there. That's can be much more daunting. Again, that depends on where you have your bank accounts as well, and the connectivity and the relationships that you have as well. So thank you very much, everyone, for taking the time to answer that question. And so really just talking about the ROI of understanding and managing your bank fees. So it can be incredibly taxing. In most cases, you would need a solution to help you do that. Back in the day when I was in Treasury, I think this practice still happens. They have someone that manually looks at all the bank statements month to month and tries to find any issues that occur, the volumes, how things are categorized. So there are a lot of different ways that fees can change and fees can be hidden, whether that's intentionally or not, is up for the user to decide. But there are studies, I believe, that 7 to 8% of bank fees are misclassified or overcharged at least, and that's billions and billions of dollars. So it's very important. So understanding of bank fees and also the communication as well, the reporting, right? It's going to help you optimize your balances, mitigate your counterparty risk, right? You want to ensure that you're getting the best price and your service usage. So you want to see what that is as well. And just a point on the pricing side, it allows you to make educated decisions on the allocation of your treasury services. So you may have a great relationship with a bank. They may be a major credit provider, and if they're good with those fees, but maybe not the lowest cost, it's worth it to you to allocate that fee wallet. And also there may be differences in terms of the service that they offer as well. But it's just important to make educated decisions on your bank fee. So what are those? And then what do those look like across the board? And what's the value to my company in those services? And also on the other side of it, what value is that giving to your banks. And so when you can align on those two, the expectations of what those are to make that relationship a win-win on both sides. And if you haven't done this, you should make your bank relationship manager come in, even if you have 250 bank accounts, and explain every single line on your fee statement. Sorry, any bankers on the call, but that should be expected, and that should be done. And people should be paying attention to those bank fees. If you're not, it can cost you tens or hundreds of thousands of dollars. And so just to look at, the revenue, corporate range, the bank fees, and then the annual ROI, if you are paying more attention to these solutions and you're getting information and you're benchmarking, reclassifying, and working with the banks, there are a lot of times when the analysis statement, the mistakes they're not made on purpose. It's just classifications and things of that nature. So those are things we want to have a handle on. But if you look at it, if you look at the amount of bank fees, I mean, it's pretty staggering if you don't really look at it, right? But a couple $1 million, the ROI is 15 times, right, what you pay. So it's pretty extensive. So there's definitely a lot of ROI to investing in those fees. Of course, you want to look at the messaging, the solutions out there. We'll take the messaging in those and allow you to do that analysis and benchmarking. And it is about helping coordinate and get that messaging with the banks to get the file formats for those bank analysis statements, which again is going to be more complex depending on where you are consuming your banking services. And then these are just the questions that you should really consider. It seems like common sense, but again, you should be paying attention to these. Now is a good time. You're kind of still in the first quarter. Let's make sure these are part of our objectives. For Treasury success, we see managing bank fees effectively is a metric of success, as it should be. Are you being billed correctly, right? How does your pricing compare to peers? You got to be able to compare apples to apples, and a lot of times software is necessary to do this. Are there opportunities to optimize, right? Your bank-based fees, depending on your structure, maybe your capital structure, maybe your targeted balances across different regions of the country. Where can you reduce interest paid, right? Overdrafts, you have better information on that. Where can you improve interest margin? And so I talked about this, how do you optimize your banking wallet? Those are just things you want to consider. And again, I just think it is an essential treasury management practice. It's a main cost driver. You got to have that transparency without the risk of being overcharged or incorrectly billed as high. Your bank should be willing to work with you in order to deliver that transparency, and that you should have that review process. You should have that renegotiation process. Again, it can fail. Failing to manage bank fees can cost your company thousands, if not tens of thousands of dollars worldwide. So John, before I go away from this topic, can you share with us some of the challenges that you used to see in managing bank fees and how the world is a different place to now? And then just give us a little bit of an overview on how you guys are working with your new partner in this area for us.
Yeah, I mean, I think you hit one point directly in terms of it's really hard to understand your bank fee analysis statement, and it's hard to understand it between multiple different bank relationships. It could be that if you're looking at something like ACH services, that's made up of 3 lines for one bank and then 7 for others. So just trying to normalize those fees and understanding comparably what you're paying bank relationship to bank relationship, that was always a huge challenge for me. Obviously bank fee, we saw companies here that had 250 plus bank accounts. So I'm assuming their fee statements are hundreds and hundreds of pages. Obviously that's a lot of data to try to go through to really be able to digest and understand on a month over month basis. So that's definitely one. And then the other is just knowing if what you're paying is market rate. And like you brought up, Ernie, there's been a lot of different data sources that have been produced over the years. The AFP service codes, the AFP benchmarking reports, that was one I used back in my day for sure. I think that was sort of the de facto, only source you could really go to benchmark fees. But even within that, it was difficult to understand if what you were looking at on that fee benchmark list really correlated directly to the charge you were looking at on your bank fee analysis statement. And then that doesn't even bring into sort of the equation when you have to actually go back to the bank and negotiate and sort of how you're going to do that. You're going to do that based on just sort of fee benchmarking data, based on volume increases, based on more relationship factors. So I think those are definitely challenges as well. The other one I think is understanding share of wallet, particularly between the banks that are giving you credit, right? Just understanding how you're dispersing out, sort of some of that fee income between the different bank relationships, and if you're managing that correctly. That obviously goes more into holistic bank relationship management, but it definitely has a tie into bank fee management as well, I think. So those are definitely some of the challenges that I saw. Yeah, I know for 2024, we actually have a white paper out on our website about bank fee analysis as well that I definitely recommend everybody checking out. But the market research is showing that a lot of the banks are obviously looking to increase revenue in 2024, and a lot of them are doing it obviously through bank fee increases. So we're hearing a lot that, with the January fee analysis fee statement, a lot of corporates are also getting a letter saying, hey, XYZ fees have increased, and sort of seeing those charges reflected on their January fee analysis statement. That's obviously sparking a benchmarking exercise and just sort of an analysis on their part to see, if there's anything they can do to kind of get those costs under control. But yeah, otherwise, I think you called attention to all the challenges really well, Ernie, like in terms of, it's just a huge cost item for Treasury. It's one that gets a lot of attention come budget season. Obviously, it's probably the biggest expense item out there for Treasury. So
Yeah. Will you just touch on briefly? I know that TIS is spent years and years developing and investing in the different formats, right? In the bank messaging and financial messaging and in payments messaging, and as well, and just how that was a natural extension for you guys to work with. I believe it's in depth with their bank fee analysis. Can you just kind of touch on what you guys are doing there, just for a couple seconds or so?
yeah, I think you're exactly right. So we've historically done bank account management for our customers, just helping them understand their account structures, cash management structures, and where inefficiencies might lie there, where they can get more efficient. Same thing on their payment processes, helping to sort of make the payment process more standardized, more efficient batching of transactions, more cost-effective, payment methods in general used by our customers. So, but we never did true bank fee analysis and benchmarking. So, but I think it was, to your point, it was a really natural extension for us. So,
Right. Yeah.
last year we went out and we actually partnered with In-Depth, which is a Curanos product, to offer bank fee analysis to our customers. And through that tool, we can do normalization of bank fees between different bank relationships. We can do trending. We can do share of wallet reporting. We can do automated price discrepancy identification so that you're alerted of a price different than the contract price, which is something obviously Treasury is doing, on a month-to-month basis with their analysis fee statements. And we can also help our customers benchmark what they're paying for fees in comparison to their peers. So, like organizations who are using the same bank fee relationships and holding the same balances and have similar volumes, which is obviously a really powerful tool when you go to sort of understand if you're paying market rate and ultimately have that negotiation conversation with your bank partners.
Yeah, it's just a game changer, right? When there are companies that I know that used to have one or two people, all they did was manually look at bank statements, but the type of analysis that you're talking about used to take months, if that was even possible. So John, a couple people asking about the white paper. That's on the TIS website, right? Is it tis.en or /en? What's do you know the?
Yeah, so it's actually TIS payments, all one word.com is the website there.
Okay.
And go into our content asset piece of that website, you should see it. It's probably one of the most recent ones published out there.
And if you guys, if anyone wants that, just go ahead and reach out to me, and I'll direct you over there. Thanks for the question. Thanks, John. All right, let's go ahead and dive back up and take a look at a modern connectivity structure. John?
Yeah, so now we're going to get into a little bit of we highlighted a lot of the issues with or challenges, at least for companies and maintaining an effective bank connectivity strategy. So what's the solution? And this is definitely one that we proposed out to a lot of the corporates that meet that complexity model that we kind of looked at the last slide of the previous section. Obviously, how you go about this is going to differ a little bit depending on the complexity that you have within your business. So say, for example, you only have one bank in the US and they accept the NACHA format and send you a BAI back and reporting. Something that like this is not going to necessarily make sense, but as we showed, as you start to add 2, 3, 4 bank relationships, multiple countries, the complexity just compounds and compounds as you consider protocols and formats and payment instruments and things like that. So, there are tools out there. A lot of the gaps that we're seeing is really the ability to sort of have the bandwidth in-house and the expertise to be able to address all those different variables. So it just makes sense to outsource that complexity to a third party who specializes in that. And what this allows you to do is basically work with standardized file formats from your ERPs, your source systems from your banks, and let the software take care of the transformations to the bank country specific format requirements, enhance those files with certain data requirements, manage that multi-bank protocol that we showed before. So if you have banks connecting through host to host, API, Swift, whatever it might be, manage that all through a centralized hub. So essentially the business has one point of entry to their entire bank connectivity relationship, and that's through sort of a unified payment hub or aggregation software. Obviously, this is what TIS does, right? So in a way that we sort of really simplify that complexity for our customers and allow them to really unify their processes and get to straight through processing, standardized processes, automation, security, much faster than they could if they were sort of addressing these hurdles in-house. Also, a big thing that we always look for is putting in place scalable processes. I think everybody in Treasury knows that nothing is ever static. Treasury is always changing one way or the other. Your company might be doing acquisitions or divestitures, might be just growing organically into new markets, or they could just be changing bank relationships because of changes in the credit facility or whatever it might be. And contemplating those changes is something that is always going to have to take place within Treasury. So having a scalable model so that you don't get to a standardized process and then lose it once change is introduced is really a key benefit as well. So, and there's the technology hurdles that are solved, but I think en route, what you really get there are the operational improvements, like we talked about a little bit in the first section. Really what you're trying to get to is that standardization, because it allows you to really be able to control your payment processes globally, institute a more unified payment approval process, break down those data silos, and really sort of control the business much better. For Treasury, this is obviously critical. Everybody's talking about cash visibility these days, and cash visibility isn't just logging onto an e-banking portal and pulling a bank statement every day at 2 o'clock. It's understanding that information, in real time. Also understanding all the complementary information, like what's going out for payments that day, what's coming in for cash receipts, what's still in transit, and information such as that, right? And as you unify all these source systems, all these bank relationships into this hub, this solves a lot of technology complexities. You also solve a lot of process complexities, and you set yourself up for really good analytics on a go-forward basis as well. So that's another key consideration of this. The other is, and the obvious one is the elimination of the e-banking portals. So yeah, I'd say probably most 95% of companies we talk to are still using e-banking portals in some respect in their business to pull information reporting or to do manual payments. And obviously that's not the most secure way to do things. Also, there's a lot of implications there for user management. That is a big headache for Treasury. Who has access to what? Do they have the right entitlements? If people leave the organization, is their access deactivated proactively? And through the institution of this, you not only have an electronic hub for payments, but also a single source to go into for users to pull information reporting, to do analytics, and to do manual payments as well. So it's another nice way to be able to clean up that bank connectivity process. And maybe pivoting back to the additional efficiencies organizations can get through the changes that are happening in messaging format. One thing we talked a little bit about in the beginning of the webinar here was the migration of sort of legacy formats over to the ISO 20022 standard. As mentioned, that's still ongoing. We have some figures here that show there's still a heavy volume of messages going through MT message formats, and even some of the legacy formats like NACHA and BAX and CPA that exist in particular regions. But we are starting to see a lot of adoption to ISO 20022 payment methods. And that's because I think organizations are really recognizing the benefits that ISO brings in terms of standardization. So it's a single structure, it's a single format that can handle all bank relationships that have adopted it. It can handle all payment instruments, whether those are urgent payments or batch payments or cross-currency payments, whatever it might be. And they can even handle some of those other really difficult complexities that I mentioned before that might be region specific, such as the regulatory reporting elements and the local language characters. And that's sort of an anomaly with this format, is there's never been a format before this that could handle all those different variables in a single structure. And obviously there's a lot of efficiencies corporates are going to get from that, and some are already making that migration today to be able to take advantage of that. As we move into this next slide here, this is an example of some of the efficiencies from an operational standpoint that you can get by migrating to the ISO 20022 formats. So here we're looking at a payment initiation instruction. On the left-hand side, it's in the classic MT format. On the right-hand side, it's in a PAIN 001 format. So if you were to think about the receiver of these funds, on the left-hand side, you have that, that segment 70, which is basically your remittance information. You're telling the receiver what invoices you're paying, what amounts, how to apply that cash on their side. But it's all in a very unstructured single text line that might not be really machine readable, so that when that's received on that side, it can't be automatically applied. There's character limits, there's all sorts of restrictions pertaining to that. If you look into comparison to that on the ISO side, you can see that all that remittance information is actually placed into its own structured segments. So if it's an invoice, there's a special segment there for the invoice number. If there's a supplier unique identification number, that's communicated there. Any additional remittance information all goes into its own segment. So when the source system receives this in, it automatically knows to look for these segments and be able to apply that cash automatically. And if you think about sort of all banks reporting this information in the exact same segments, the amount of standardization drive on the source system side, on the receiving side, is huge. And this is just one example of many, many different examples of how ISO is really fueling a lot of automation and advantages for Treasury through data richness and the structure of the information.
All right, John, let me go ahead and just to jump in here with a polling question. Just a level set benchmark, see if what the amount of adoption for APIs with our audience. Communicate with banks. Do you communicate with banks, leverage APIs? Yes. Payments and bank reporting, balance reporting only. No plan to do so this year, or no plans to begin. And then once we get that poll, we'll go ahead and take a look at some survey results and see how our audience compares to the survey respondents that we have. So I'm going to go ahead and leave the polling question up for a few more seconds. Again, those of you interested in receiving a certificate of attendance for today's webinar, you'll have to answer all the polling questions. And if you'd like a copy of today's presentation, just go ahead and send me an email to ernie@treasurywebinars.com. Also, if you'd like a copy of the white paper that John mentioned, please go ahead and let me know as well. I will direct you there as well. And also note, there are also a lot of other great resources on the TIS website. And also they have some interesting coffee talk episodes where John really goes one-on-one or one to two to three in panel and talks about some issues with some leading practitioners. So that's always interesting as well. So let's go ahead and close the report and take a quick peek at the results. So keep these in mind. We had 28% payments and reporting, 15%, 25% in 2024. Then we have 32% no plans to begin. I would imagine that once the webinar is over, we'll have some of you that are thinking that we may need to do a little bit more research in there, and hopefully we are showing you the ROI to doing that. It can be a game changer on many levels, especially given complexity that you are dealing with in doing business in multiple countries across multiple continents as well. So keep those in mind. We got, what was our percentage? 28% yes. So let's go ahead and take a quick peek. John, I'll let you go ahead and drive us through and compare to this slide with your survey results we saw.
Yeah, it's interesting. So the slide you're looking at here is from the survey I mentioned earlier that we launched with Ernie in 2023. We asked the same question to the practitioners in that survey, and the results came out that close to, 75% were using APIs for either payments or balance reporting or both. And I think the results we just saw were closer to 45, right? Based on the funds on the survey. So yeah, interesting, definitely a disparity there, but I think it just goes to show that this question, it depends on, I think, who you're polling, in terms of what you're going to get for responses. There's a lot of variables that are playing into whether or not corporates are using APIs. There's a lot of, I guess, variations in maturity of APIs between markets, and even, whether or not they serve different segments of the market. So, for example, it'd be rare to see, I think, upper mid-market or enterprise level company who's got a global payments process that's really, focused on a lot of variation in their batch payments globally and things like that, using exclusively APIs as the communication method. There are others that are probably doing a lot of treasury payments that are, posting payment instructions through APIs with their banks in a really efficient way and using those technologies well. European banks are much further ahead, it seems like, in most cases than US banks when it comes to APIs. So there's just so many variables that go into how those results are going to ultimately shake out. I think the high level there is, exactly. The pros and cons of using APIs is that there's still a lot of variability. And, I think the high level messaging there is always think about the use cases, and if the technology supports your use case. So in a lot of cases, it might be that corporates are looking to use APIs because they're looking to manage cash a lot more actively, intraday, position in real time. And if you're doing that, there could be, depending on the banks you use, APIs could be a great technology adoption, allow you to get more in comparison to more batch transmission payment reporting processes. But if you have a process that's very heavily reliant on driving, say, batch AP payments globally across 25 different markets, that use case might not be met by the maturity of APIs, depending on the bank relationships that you're using today. So there's just a lot of considerations. So always frame that decision around your organization's particular use case.
John, let me jump in here. I always have this questions. I'm not as versed in APIs as I'd like to be at. So I know that from my reading that not all APIs are created equal. Can you touch base on a little bit of why not, and what are some of the differences, or what are things people might look for when someone talks about they use an API?
So in some cases, it's the use cases that's met by the bank's API. So in some cases, banks are developed APIs for reporting, say, providing balances of transactions via API, but not yet for payments. And if you're thinking about connectivity protocols, most corporates would be reluctant to maintain two different protocols if they couldn't, if APIs didn't meet the payment needs, they wouldn't have APIs for reporting, but like an SFTP connection for payments. So that's one consideration.
Right.
The other is a lot of the APIs that are out there for banks today are really just another way to move a file from point A to point B. So like, for example, the API might go out and pull the MT940 for you, but a lot of corporates are questioning the value of that, because if, say if they're looking at intraday data and their bank only produces MT942s twice a day anyway, say 1 o'clock and 3 o'clock, and they're using an API to pull that information in instead of like an SFTP pull to pull that information in, they're still not getting the information in real time. They're just moving the file through a different protocol. So that's another thing that we see corporates kind of questioning a little bit on APIs. But there are some really robust APIs out there that actually do calls and pulling data in real time, and also allow you to post at least single payment instructions in real time and things like that as well. So, but you're definitely right. There's a lot of different variations of API, and there's a big difference in the maturity, it seems like, bank to bank these days as well.
Yeah, because to me, I just see like some companies use that, right, as a benefit. We have an API, but that doesn't mean it really helps, like you said, your use case. So some of us get into the default, and the API is magic, and it's automatically going to give me everything that I need, right, for the use case. So they need to dig a little deeper, it sounds like, into what exactly that means. So thanks, John.
Exactly. Yeah, and I think this last one here just speaks more broadly to the application of APIs, more on like the corporate ecosystem side. So the left side is that sort of diagram of the office of the CFO, and just the thought there is that integration APIs can facilitate a much more frictionless flow of information, say between Treasury and AP and accounting and compliance and things like that, right? And that is reality today, because if you're using the right applications, the right SaaS applications, cloud-based applications that are built on mature architectures, they do offer APIs that allow you to integrate to other solutions in a really dynamic way, right? But obviously this is going to hinge specifically on your organization's integration strategy and whether or not you have sort of the right enabling technologies to be able to use the APIs in this way. But I think nevertheless, if you look on the right-hand side, that speaks more directly to Treasury's kind of role and use of APIs and system integrations. And I think it becomes clear that Treasury is both the, I guess, consumer and supplier of a huge amount of data. Treasury is always needing data from, say, AP, AR, accounting, variety of different FP&A, all different organizations internally to do things like, create the cash forecast or position cash or do liquidity planning and things like that. Likewise, they're sort of the gatekeepers of the bank data, but downstream, the accounting departments, the AP departments obviously need to be able to access that data as well. So there's really good use cases around the use of APIs internally to move that data and allow Treasury to be sort of a good business partner and a provider and consumer of data in a much more efficient way.
Yeah, John, let me jump in here. I think I've been doing research on some other things on regulatory and messaging and reporting, and just on the messaging side, just want to touch real base. This kind of shocked me because it wasn't the case when I was in Treasury. So for FBAR reporting, if you're a signatory on the foreign bank accounts, then you are obligated to file a report or have your company file it for you. So if you don't, then there's fines associated with that. So I don't think that's really out there enough. So that gives you an incentive to pay attention, right? John, I was surprised, but you guys talk about that too, but that's another thing we need to look at, and that's a value of that reporting as well, because it's hard to put those together.
Yeah, and that's filing an FBAR is bringing a lot of data together in terms of your EBAM data, who the signatories, what the accounts in scope for filing, your information reporting in terms of that maximum account value balance and some of the legal entity structure information as well, right? So yeah, it's another great use case for this.
Yeah, just popped in my mind because it really shocked me, and I wrote an article about it. But I just think it's something that Treasury people, especially, sometimes you're excited to be a signatory, but that's one of the responsibilities, to make sure that your company is on top of that and that you're getting that report filed, which is due in April. So I'll go ahead and hand the floor back over to you to wrap us up some closing thoughts, and then I'll share a few things that we have coming up in the Treasury webinars world.
Yeah, sounds good. Just final thoughts. Hope everybody enjoyed the webinar, first of all, and always happy to connect after on any of the topics you want to dig deeper on. But, first of all, strategically choose your bank and tech partners. I saw this a couple times during the course of the webinar. I think that tech is evolving, but some of the use cases haven't reached their full maturity, or the technologies haven't reached full maturity to support the use cases. But at the same time, there's definitely a shift in technology happening within Treasury. So I think a lot of corporates out there making decisions today want to make sure that they choose the right provider that they can grow with. Same for their banking partners, right? Secondly, the integration to the back office is crucial. That's where you get the advantages. That's where you really get the efficiencies, where you drive that standardization, that control, where you break down those data silos, like we mentioned before, which are critical. So that's an immense sort of thing for Treasury to tackle, to be able to put in place a level of control that they want to fuel their analytics strategy, and to set themselves up to use AI and machine learning in the future by having a good data management strategy. Third, interdepartmental collaboration is key. Treasury is like we just said on the last slide, they're the provider and user of a lot of data, but they also need those relationships as well. So, Treasury is always collaborating with the AR, the AP departments, the FP&A departments on information they need to project out cash or forecast liquidity. Likewise, they can be a key business partner back to the AR and AP departments about trends they're seeing in DSO, DPO, their share of data, their consumer of data, and technology and having a good process in place for integrating those systems is key to driving that interdepartmental collaboration. And then, fourth, the process of refinement is never done. Like we were talking about before, things are always changing within a business. It's never like you solve a technology issue and then it's good for the next 5-10 years. Businesses are always doing acquisitions, divestitures, growing organically into new markets, changing bank relationships. There's always change happening. So whatever processes you put in place, make sure that they're scalable in the way that supports the way that your business is changing, so that you sort of don't undo a lot of the good things you did during the course of your tech project.
All right, thank you so much, John. I always appreciate your expertise, so thank you so much for taking the time to be with us today. Always exciting to know what's going on in the world, but also all the exciting things going on at TIS. So thanks, John. All right, I'm going to go ahead and launch our final polling question. We had a couple questions around maybe we should have a webinar on bank fee statement analysis. We actually have that coming up on March 28th. So hope to see everyone there. I have the leading expert who led the projects for the service codes update, Bridget Meyer, and she's going to join us and run us through the code changes, what they mean for you and what they mean for your banks. Also want to share with you that I am leading an initiative. I started the Finance Collective community, which is a community completely focused to soft skills, skills that matter no matter where technology takes us, and allows you to contribute on your terms without being monetized. We have an event coming up on March 14th, which is Listening with Purpose. We have a couple of my Treasury colleagues who are going to let our expert, Dr. Laura, she's going to review their listening profiles, and they're going to share with us what they've learned. So would love to see everyone on that webinar as well. So I'm going to go ahead and close the final polling question. Thank you so much, everyone, for taking the time to answer the polling questions. Of course, once again, I want to thank my thought leadership partner, TIS. Again, they share my commitment to the career success of those that use their software, in addition to providing thought leadership as well. Thank you so much, everyone, for your valuable time. Make the rest of your day great.